What is a fair value gap? A fair value gap is when three candles are on a row. For example, a bearish fair value gap is going to be, let's say we have this candle, doji, this bearish candle, and we have this bearish. A fair value, a fair value gap is going to be a fair value gap is going to be the low of this first candle, which is the wick here, and the high of the third candle. The space in between on the second candle, that the this high of the third candle and the low of the first candle doesn't overlap. Okay, this space here, once you see a space here like this, that area is what we call a fair value gap. This place. So one, you can see that price went up and it is inside a bearish fair value gap, which means it should sell from here. That is if this bearish fair value gap is going to hold. The other thing is that you see this area. So I'm now trying to um, talk about like SMC a little bit, like smart money concept a little bit. Okay, so you see this bearish candle and this bullish candle. This is what we call an order block. So dropping, when price was coming down, this order block should have held price to go up. But this order block was crashed. Okay, the sellers push price below the order block. Okay, so once the order block was crashed, it should now play the role of an inverse order block. Okay, which is what we call breaker. Okay, it has been broken. So it should now be used for the reverse. Okay, it was a bullish order block. It should now be used for a bearish failed block. And then the other block happens to also be at the same place where a fair value gap is. This makes this area a strong area. Okay, two institutional reference points at the same point. Also, this move that crashed the other block broke structure. It took this low out, took a previous low out. So we have a bearish break of structure, a failed bullish order block, and a bearish fair value gap. When price pushes back into this area, there should be a reaction to sell. We should have a sell. At least we should sell back to this area, somewhere this area. Okay, but the sell reaction started taking place. Price was dropping, and it came down to another bullish fair value gap, which is still inside the bearish fair value gap. Okay, just came down here and reversed up. Okay, so what I can say is that for before I will call this setup invalid, I should be able to see, you see the top of big the big candle here, this bearish candle, the body, the top here. I should be able to see that there is a body close above this area. If price closes body above this area or even this high, okay, these are two doji candles here. If price is to close a body above here, then I will say that, okay, price has failed to pay attention or utilize this area of interest according to the smart money um, concept or reference points that I'm trying to find here. Okay, so though um, the first trade we have taken has not worked and price has gone up again to hit this area, we see that the moment it's hitting here, it is rejecting. Okay, we can see a wick here. See, it's hit here and then it's rejecting. So it still has the possibility to drop or to sell. Okay, so let's go to 1 hour. If we go to no 2 hour, if we go to the 2 hour, you can see the current 2 hour candle was up, hit up here, and all of it is rejecting, which means there are buyers, sorry, sellers here who are pushing the price down. They don't want the price to go above. And already we've seen price has sold from this area. Okay. So still, that though this high has been taken out, it doesn't mean the setup is invalid. But without a bigger capital, if I took the entry on the blue line here, without a bigger capital, if something like this is happening, you cannot be holding the trade. As a matter of fact, I was using $40 to trade this. I I put $40 in the account today. All is gone. But the account came into profit. I was making like $100. I first made 17. I was in profit of about $40. The account, the balance was over $100, the equity. Now everything is gone. You see, all because of capital. So the setup is still likely going to play, but because maybe I got an early entry and price is trying to still try to manipulate up more. Okay, so that could be the reason why I've been stopped out. Okay, so we still have to monitor and see. You see, I posted and I told you that it might want to make a double top here. So we should keep still watching out. Until this high area is taken out, price closes body above this zone. Let me put a line there. Until we get a body close above this area like this setup is still likely to be valid. Okay. And if we go to the daily time frame, 24-hour, you can see today's candle has moved up trying to engulf yesterday's bearish candle. Okay, so it moved up, it has moved up trying to engulf, move up trying to engulf yesterday's candle. Okay, so maybe it might reject a little bit down, and when when tomorrow's candle open, that might push price down. It could be like that. Okay, so we don't know yet. And how many hours do we have for today's candle um to to end or to finish? We have about 1, 2, 3, 4, 5. We have about 4 hours more. So we still need another 1 hour, 4 hour candle to open and close before today's candle will finally end or close. Look at the 8 hour. 8 hour is having three bullish candles that are all fighting hard to close above this large, big bearish candle, which means this bearish candle, red candle here, look at how big it is. There is a selling power or energy within this candle. If price is to close a bullish body above it, then we will know that all the sellers that came into the market here are not strong anymore. But as long as price stays below this big bearish candle, price still has the likelihood to drop. That's from the 8 hour perspective. Okay. From 4 hour, we can see that still where I put the line for the 8 hour level is still intact. We don't have any bullish candle being above it. So we are still below. Okay. And we can see that price is just trying hard to go above that place, and there are rejections. Okay. And a new 4 hour candle just opened. So this candle might go up, maybe might make a wick drop. If it start dropping, okay, and let me you see this internal high here. Let me go to 1 hour. From 1 hour, we can see that this, I'm putting a new line here on the 1 hour. Let me put this line as a trend line. You see this line here? Good. This line, I'm using it to represent the previous high or point here where sellers started pushing the market down. So I'm putting that point here. Okay. So if price keeps failing to go above this level up here, if price keep failing to go above this level up here, and it stays below this exact point where sellers push the market down, okay, which is here. Look at the calculation well, which is here. If it stays below here, the moment price keeps dropping, and it gets to the blue line and drops below the blue line, I'm telling you, the thing is going to keep selling. Okay, so this is what I'll be looking for to be fully convinced or have the confirmation that this market is going to sell. If it doesn't do this, it means it will not. Okay, so let me push this. You see the blue line, I'm putting the blue line exactly where this bearish candle broke down from, but I can still push it up a little bit to where this next bearish candle took from. This one retested this area. You see how I'm doing it? We can see this one drop down to make a wick exactly at this point and rejected back inside. Okay, so we need price to be above this red line, sorry, be below this red line, stay below this blue line, and then that is going to give us the sell we are looking for. Okay, so now because you see, because you are seeing that price took your first entry out and then it's trying to drop, doesn't mean you should enter for sell again. No, you must reanalyze the market to find important areas or points where the market should be or react or stay in order for you to get a new entry. Other than that, if you are getting a new sell entry just because you see a red candle after crashing you out, you might end up making more losses. Okay, you don't want to be adding to losing positions. You are losing and you see a small sell, then you want to sell again. No, that's not the way you should be trading. You will lose more. Okay, so based on the current refinement I've made about the trade, if I had like $500, by now I would have been in maybe $50 loss or maybe something like that. From this blue line, from down here to here, maybe $50 loss or maybe 60. I could still hold the trade. Okay. And I could still be holding the trade if I had a bigger balance on that account. But now it's gone. Okay. So let's go to 30 minutes and see. Yeah, so 30 minutes is not looking too bad. And this area also looks like a supply zone, right? This area looks like a supply zone. There has been sales from here. It makes sense for price to get here back and sell again. Um, 15 minutes, 15 minutes is also looking not too bearish yet. But one thing I can also see here is I can, so I want to look for a head and a shoulder pattern. So I can see this first high that it gave us. I can see it made a low here. It has gone up to make another high. Okay. Is it going to stay with this high and not make a new high? I don't know yet. But what I do know is that for this market to sell, it should come down to somewhere here to test or to to test the neckline somewhere here, and it must go up, but it should fail to make a new high. So once it goes up again and fails to make a new high, that's going to make us a right shoulder. From the right shoulder, I should expect market to break this trend line or the neckline. Once it breaks it, once it breaks it, the market should move up, retest the neckline here, or come to retest the right shoulder, and then I should expect a bigger sell or move. If I want to predict or see a head and a shoulder, a reversal pattern before I get a confirmation that it's going to sell, this is what I should be looking for. Okay. Without a head and a shoulder pattern like this, the market might not sell. Okay. That if it doesn't want to make a head and a shoulder, then fine. But if it wants to make a head and a shoulder, it should look like something like this. Okay. Also, the market can decide to make a double top. This could be one top and this could be another top. So it could just decide to just drop, boom, crash this area, crash the neck, and then it will pull back up to retest the neck, and then boom, it will sell. This will be a double top. So if you are expecting the market has been buying, it is inside an area of interest, and you are expecting the market to reverse, you should be looking for reversal patterns. What are the two basic reversal patterns? Head and a shoulder, or double top, or triple top. This is what you should be looking for in this area. Okay. The other thing is search through all the time frames you can find and be looking for evening star. Okay, evening star. So first we got one evening star formation here. Okay, we got a bullish candle, a doji, and a bearish candle. This is an evening star. We got the first evening star. The market sold small. Then it reacted into this a bullish fair value gap, and boom, went up. Okay. Now, we need another evening star in order to sell. Without a new evening star, you cannot sell. So, for evening star, you need a bullish candle. Okay. So this is this a bullish candle. We need a bearish candle. We need another bearish candle to engulf. Okay. So this is 1 hour time frame. Once you get this kind of pattern, you will be okay to sell. So, what am I trying to tell you all today? If you are expecting a reversal at a particular area of interest, look for all the reversal patterns or indications. Okay. The market should make one or two of them in order for the market to reverse. So you must train your eyes to be able to identify all those things. If you check 1 hour time frame and you are not seeing those reversal patterns, go to 30 minutes. Okay, go to 30 minutes. So what is this 30 minutes saying? 30 minutes time frame. I have a bullish candle, I have a doji, and I have a 30 minutes candle that engulfs. Perfect. This is an evening star on 30 minutes. Is this evening star going to be more stronger? I cannot tell. But what I can say is that it is an evening star. Okay. So if you are sure of a 30 minutes confirmation, you can enter the trade as an early stage. You can enter the trade even before the 1 hour engulfing, bearish engulfing, or evening star forms. Are you guys following and getting what I'm trying to say? Are you guys getting it?
Hmm?
Good. If you come to 2 hour, 2 hour, you need another evening star. So 2 hour, we got, I think, bullish, bullish, bullish. This one, it looked like an evening star, but it couldn't hold water. Okay. Then now moved up. Then we got a bullish candle, a doji. We need this 2 hour candle to engulf up to somewhere here and close. Once that happens, we are going to have a 2 hour evening star here. This is going to confirm for us to sell. So you must move through all the time frames from 15, 30 minutes, 1 hour, 2 hour, 3 hour, 4 hour to find all the reversal patterns you might want to be looking for at this area of interest in order for you to confirm that the price is going to fall or sellers are going to be in charge for you to have the reversal of this bullish move. If after going through all the time frames, you still don't get the reversal patterns formed, forget it. Okay, forget it. And mind you, the bigger the time frame or the higher the time frame, the more valid the pattern is going to be. Okay, let me repeat that. The higher the time frame you are using for your confirmation, the better the validity. Okay, that should be it for now. Any questions? Um, I would like us to, so then this is the update on the I think I shared the volatility 100 1s. Yeah. So price is reacting into the yellow area, coming back, coming down to the entry zone for a buy. So let's keep watching to see what will happen. But we got a reaction, a buy from here, came back again. We have seen that place trying to be broken. Let's see if it gets to the imbalance here, which is the entry. Let's see what will happen. Let's see if it will react up. Okay, if it react up, we see a break of structure on 15 minutes, 5 minutes, 30 minutes, we might be able to buy. But if we don't get it, let's just leave it alone. Uh, what else? I think that should be all for now for the update. We have to check updates on the forex pairs, like the DXY, Euro USD, GBP USD, because the market is going to open soon. BTC, gold, and the others. So see. Um, let's see what the next session will give us. Okay, how many people are in the meeting now? Miss Uche, Miss Patience, Second, Abubakar. Good. So this session is already out because you guys did not join very early. So when it goes off, let's wait. Let's get the next link, next session, and then let's do update on the forex space. Are we okay? Are we all good? Are we all on the same page?
Yes,
Mhm.
sir.
Okay, perfect. Um,
Yes,
before
sir.
before we end this session, any question? Any question? Does anyone have any question? I wanted any of you to share your screen and show if you could analyze based on what we've been learning. Is anyone ready to do that today? If not, we can do it within the week or next weekend. Is anyone ready?
We
Mm,
should do next weekend. But I
You,
think the lady is ready, so
who is ready?
I'm not
Is
ready.
it?
My problem is that PR
No
yeah,
problem.
like
I want you to show how you are understanding it. We will all guide you. Do you use computer or you are going to use your phone?
no, I don't have a computer. I have a phone.
But you can, if you want to share your screen and show the way you understand the thing or how you can analyze, we'll be happy just to see you show that. Okay. Miss Uche, will you want to do that today? Abubakar?
Not today, sir.
Okay. All of you,
Let's leave it for
all of
next
you
week.
are afraid. Okay. Abubakar, what's of you?
Abubakar will start next week.
Okay. So no problem with that because it takes time for you to be it is one thing to know what you are doing, another thing to even explain or express yourself. Okay.
Mm.
So this thing we are doing is not a joke at all. It's
My
a
my
new
problem is
it's a new field for all of us. Okay. We all
my
didn't
my my,
learn this in school.
my problem is how to start that volatility pairs that we go and start on the trading on the MetaTrader 5 that
Mhm.
they don't have Monday time frame.
Yes,
I'm
but you
still
can still play with the 4 hour daily time
mm,
frame. You can still
okay,
work with that.
okay.
Yeah, that shouldn't be too much a problem. You just have to be confirming with your MT5 to see the bigger trend.
Mm-hmm.
That's all.
Yes. When we want to start the next one, we just start from step one so
Okay.
that we grab again. So we
Okay.
cancel all lines so that we can
So,
see how
is there any
those
of
lines
you
are.
who did not give any pair for us to analyze? Does anyone have any pair which we have not analyzed yet?
That volatility 10S I gave, I don't know, it is not analyzed.
That's a pair you are interested in, right?
I don't know. I just wonder you should guide me. I don't like too much volatile pairs. That
Okay.
will cause
Okay.
trouble. If that
Okay.
one is not too volatile, then we'll
Okay.
try and start learning from there.
Okay.
Volatility 10 or 10S, whatever, which one is not
Okay,
too,
so we
too
will look at V10 or 10S in the next session. What about
okay.
forex pairs? Is there any forex pair we did not touch on that any of you want us to look at as part of the second and third session for today? Is there any pair?
Except that we just repeat a pair. But if we want to repeat, we just take from step one. We take from step one. We go to step two, step three. Yeah,